Hey, welcome or welcome back to the channel. On this video, we're going to talk all about getting two VA loans at the same time. Yes, it is possible to do so. First of all, I'm Emmett Dempsey, mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie. I'm also a U.S. Army veteran, so VA loans are a special topic of mine. On this channel, we talk more about mortgages, the home buying process, and some cool things around Port Saint Lucie and the Treasure Coast here in Florida. So if you're moving to Florida, I definitely want to talk to you. And if you're new here on the channel, please think about subscribing. Okay, there have been some changes to the VA mortgage loan, and it was the Blue Water Navy Vietnam Veterans Act of 2019 that had changed some things, mainly if you had full entitlement. So if you've never used your VA loan before, you can buy a house with no maximum. So you want to buy $1 million house with no down payment, you can. So that was one major change. However, there's something called secondary entitlement, and I did this video once before when I was at my previous company, and since then the loan limits have changed. So I decided to redo this video. So if you're, I got a lot of calls, a lot of emails about this topic, about getting two VA loans at the same time. I want to go into further detail about how that's possible. So you may be a veteran, have a VA loan, you're moving, or even if you're in the same town and you want to buy something else and or build or do something, but you don't want to get rid of that property. You might have bought it low and it cash flows at especially at a great rate. And so you might want to keep it. So how do you buy second property with little out of pocket? Well, the VA is a really good loan program. I'm going to show you exactly how that's possible here in a minute. Effectively, there's terms that you need to know. Basically, it's about entitlement, secondary entitlement, and all that stuff. So when you have your full entitlement of 36,000, times that by 4, that's 144,000. So you might see that number around the internet. Well, it needs to be more than 144,000. That's because VA will guarantee 25% against loss. It's an insured loan. That's why the rates are so good, because VA will insure against default. So that number, times 4, 25% is how we arrive at a lot of these things. But in essence, it's really based off your county loan limit, and they're set, every year or so by the FHFA, and currently it's 510,400 here in St. Lucie County in Florida, where I'm at, and that's the same for most counties throughout America. So really, it all depends on how much entitlement you have to charge against you. If you had a prior foreclosure, it's really an individual case. So definitely coming case by case to see what you qualify for. But really, it's essentially 510,400 is basically the total loans that you can have. So if you bought a property, for 310,400, you can do another $200,000 house. That's really, and that's how you arrive there, and you'll see in the calculations. If you live in a high-cost county, especially like in Virginia, California, you can buy even more property. So let's go ahead and take a look and go into a detailed explanation of the VA secondary entitlement to buy two homes at the same time. Here we go. Okay, welcome to my handy-dandy little Excel spreadsheet. I'm definitely an Excel nerd for about everything. So basically what we have here is a calculation of how to calculate secondary entitlement, how much house you can buy with your second VA loan should you choose to do so. I'm going to that calculation. Now, as I mentioned before, it all starts with the county loan limit. Okay, so in most counties in the country, in 2020, it's 510,400. I'm going to go into a jumbo territory, like in certain areas of Virginia. I know when I was in the Army, I spent a lot of time in Virginia at Fort Lee. I think there's like 9 high-cost counties there, some counties in California, etc., that are high cost, and I'm going to go into those as well. So it all starts with your basic entitlement, and then there's what's called your secondary entitlement, or bonus entitlement, you might hear it called. And you kind of back into this number. If you kind of look at the calculations, it's 510,400. Divide that by 4. It's that 25% guarantee thing again. Okay, and then this is basically your total entitlement minus your basic entitlement, which never changes. So this secondary entitlement number can change from year to year. So let's say that you bought a house for $275,000. Okay, so you charge $68,750 in entitlement, and again, that's that 4 number again. So you divide it by 4. That's the entitlement charged minus this number, $127,600. Minus that equals $58,850 remaining. times 4 again, and you end up with a maximum purchase price for a second home with no down payment of $235,400. And if you kind of look at it, it's basically that plus that equals county loan limit. That's basically a good rule of thumb. But VA likes to complicate things and do times 4 to minus 4, 25%, etc. But you can kind of get an idea. Now for your new home, say this tells you basically what the maximum loan purchase price would be, maximum loan. So let's say you want to buy another $275,000 house. Okay, so the max price is basically that, and so the difference is $39,600. Okay, so do you have to come up with that? No, because the VA, again, it's a great loan. You only have to come up with 25% of the difference. So basically, you have to do a $9,900 down payment. And now this loan, just so you know, includes the funding fee. Now, if you're not more than 10% disabled, it's a pretty penny. I know for first timers it's 2.3%. For subsequent use, it's 3.3%. It's finance, but it's definitely a hefty fee, especially if you go up in purchase price. So you kind of have to take that into consideration as far as what you can do. And I left it out just for simplicity. Now, that's pretty darn good. I mean, basically, compare that to FHA and conventional. So a $275,000 purchase price, 3.5% down is $96.25. 5% down on a second home or on a secondary. For conventional, that's the minimum is 5% down. That's $13,000. Now, both of these options are going to have mortgage insurance. VA has no mortgage insurance, so that's why VA is an outstanding loan. So let's go to another example. Here's like you can do a Google search for FHFA kind of loan limits. This is for Virginia, and here's some high cost counties. So 765, 600. Okay, so that's one of the highest ones I see. So let's do 765, 600. You can see it kind of automatically changes all this stuff, and basically that 275, you can buy that with no down payment. So you can buy another $490,000 house, with no down payment. So let's just say you did a $400,000 house before, you can buy another 365 house, and you want to buy another, $400,000 house, and then I mean this is kind of how I come up with those numbers to make sure that we're telling you the good information, but check the county loan limit in your state, and just rule of thumb is basically these two purchase prices gotta they add up to your county loan limit. But it's definitely you can get two VA loans at the same time. You buy another primary, build another property, whatnot with the VA. It's definitely awesome. Okay, welcome back. Hope that was an informative look at how you can get two VA loans at the same time. I definitely I've used it myself. I've counseled several veterans to do the same. So it's definitely a great use of your VA benefit if you're a veteran, serve this country. And again, thank you for your service to all those veterans out there. Again, if you want your own personalized consultation, definitely give me a call. Go to DempseyMortgage.com. If you want your own personalized analysis about how to buy another property with a VA loan. I want to thank you so much for watching, and I'll see you guys on the next one.